Hi there, General Maths students. Here is an example of a savings account question. So get ready for this one. Now we have some information about somebody's transactions. On August 14th, there's a deposit of $580. So let's put that in. Okay, so we've got August 14th. We've got a deposit $580, so that's going to be a credit of $580, and we can add that onto that balance there, and we get $2,933.80. I'll show you all the calculations for this afterwards. So that's adding that deposit on. Then on August 17th, there's a withdrawal. So that means we take some money out, $195. So that is a debit of $195. And so if we take that off the $2,933.80, we get $2,738.80. So I'll show you those calculations in a moment. That's the first thing though, is to make sure you've got all those balances sorted out. Sometimes those balances will be given to you straight away, like in say this question here, that's all done for you, but sometimes you've got to work them out yourself. And either way though, the next thing to do is to work out how many days does each of these balances exist for. Okay, so that first balance on July 31st went till August 14th. You can probably work out in your head that that's 14 days, but I'll show you on the calculator in a moment just to demonstrate that. August 14th to 17th is the next one, so this balance goes for 3 days. And then from August 17th, this goes all the way up to August 31 at the end of the month, so that's another 14 days. So I'll show you on here. So there are those 14 days, 31st of August, 31st of July through the 14th of August, 14 days using days between dates calculator, and so forth for the next two. And here are those balances where we add that 580 to the original balance and then subtract that 195 from that balance. Okay, so that's how we did all those calculations. So the next thing to do is to figure out the amount of interest on each of these balances. So we've got 3 different balances. We've got July 31 to August 14th. Here's our first one. So we use the simple interest formula here. The balance is our principal, 2,353.80, multiplied by 4.75%, so 0.0475. Now the time is those number of days over 365. So it was for 14 days over 365 to convert that to years. So 2,353.80 by 0.0475 by 14 divided by 365. And that gives us $4.29 rounded correctly to 2 decimal places. Okay, so the next thing, and you might want to pause the video and do this now, is to work out the interest for August 14th to August 17th. So that's this second balance. And then finally from August 17th to the 31st, this final balance down here. So there's 2 more calculations to do and add on. So pause the video and try those, then I'll do it. Okay, so this next one, it's pretty similar. We've got a different balance, 2,933.80, same interest rate, by 3 on 365 this time, because that's how many days that balance existed for. And then this last one's going to be 27380. Oops. 2738.80, same interest rate by 14 on 365. So we get $1.15 for the second one, and then the last one we get 2738.80 by $4.99. So if we add those all up, $4.29 plus $1.15 plus $4.99, we get $10.43. Now what do we do with that? Well, we add it to the last balance, so this one here. Okay, we're going to add it to that, and that's our interest paid forward. Interest of $10.43, which of course is a credit. So that amount plus that final balance, $2,738.80, $2,749.23. That is the final amount in the account when the interest is added on. All right, so look, these savings accounts questions rely on the days between dates function. They're not all that difficult. They just involve simple interest calculations, but it can be difficult to remember what the steps are. So make sure that you practice these and get some experience with them. So go ahead and look in the description for the video for the questions you should try.